The South Korean economy grew faster on a quarterly basis in the first 3 months of the year. Growth was still less than 1%, but it was a significant improvement thanks to stronger export growth and more construction investment. Kim Min-ji reports.
The Korean economy expanded at a faster clip in the first quarter. The Bank of Korea estimates the country's GDP rose 0.9% on quarter in the January to March period. The on-quarter growth is the fastest since the second quarter of 2016. It remains in the 0% range for a sixth straight quarter, but marks a significant recovery from the 0.5% posted in the fourth quarter.
Growth was led by a recovery in the country's exports and a rise in construction investment. Exports and construction both contributed 0.8 percentage points to growth overall, after pulling down growth in the previous quarter.
Looking at the growth figures by category, exports rose 1.9% in the first quarter, marking a turnaround from a 0.1% drop in the previous 3 months. Korea's exports have been on an upward trend since November, ending nearly 2 years of decline thanks to a general pickup in the global economy. Construction investment rose 5.3% compared to negative growth in the fourth quarter, driven by an increase in building constructions. Private consumption was still slow, posting 0.4% growth, but picked up slightly on quarter.
The improvements are painting a rosy picture, indicating that the country may be on the road to recovery. If the momentum holds, the Bank of Korea says the economy will be on track to achieving its expectation of 2.6% growth for this year.
Still, there's a number of downside variables that could challenge growth.
Domestic consumption will likely continue to slump, and while the recovery in exports is expected to continue, that could change depending on the course of the global economy. Although it is expected to improve this year, faster rate hikes in the U.S. and uncertainty stemming from Donald Trump's presidency could change that.
Experts say that it will be crucial for the new government, which comes into power next month, to monitor external conditions, as well as quickly put forward and implement economic policies that can spur spending. This is so that it can live up to the expectations of the public and ensure the recovery momentum doesn't die out. Kim Min-ji, Arirang News.